If you're a university, if you're a SACCO, if you're a student, if you're a staff, and you have 100,000, come and buy a unit. Now, when we say 100,000, we're trying to say that's the minimum, not the maximum. Okay? Because some of these unit trusts have over 500 billion in them. So, the sky is the limit. All I'm looking for, pay me a daily interest, ensure that that interest is not taxed. Okay? So the interest is actually not taxed. Terrace, I would like you to say something about that, because when you talk about not being taxed, some people may not believe me.
It's been a very interesting discussion about whether to tax. So they are investing in equities, they are investing in bonds, and most of them are actually already taxed. So now the question is, do they tax the small savings that you have already earned? It's a very big question. Until now, they're not being taxed. They are said what you receive. If you're given 10%, you earn a net of 10%. Literally, it's what comes to your if you add, in simple terms, if you put 1 million there today, after a year, you guarantee, if the market rate stays at 10%, you guarantee that you're going to earn an extra 100,000. But there's also a possibility that the rate will go up, so the refund may actually earn much more. But we've not seen, it's been if it goes down, it will be a very, very slow reduction, because the fund has already invested in the pool of investment. So it will be a gradual, maybe of a period of time, but you won't see immediately. But at least you're sure that it will increase in the long run.
Thank you. So we are not going to confuse you by telling you about the different kinds of unit trusts that are there, but suffice it to say, some unit trusts can be risky and some can be safe. Dr. Mili will tell you, when you invest in a government security, it's called a risk-free investment. So why are we focused on that? To give you the opportunity to say, if I'm looking for a unit trust and you're going to ICA, you're going to UAP, you're going to Britam Asset Managers, you're going to Zeno, you walk in and say, please give me the risk-free unit trust, the one that has invested in government securities. Others will go in and say, give me the risky one. Why? It has shares in it, and share prices go up and share prices go down. Okay? Your capital is not guaranteed. But if you're going into one that has invested in treasury bills and treasury has most of their assets, you're on the safer side than if you go into one that invests in shares. So when I look at one that invests in shares, that is called an aggressive investment. When I look at one that is invested in treasury bills and bonds, that is called a conservative investment. Okay? How many of us here are aggressive investors? We want the risky investments. Please put up your hand. You want the risky ones. How many are conservative? I see a hand about to go up there. Someone is saying, I'm going to tell you. How many of us are conservative? We prefer the safe investments. Okay? Excellent, excellent. That shows me at least you've understood what we're talking about. So, at the end of the day, as I said, you just send an email and say, thank you for the unit you gave me when I brought my national ID here and told you where I bank. So you don't even need to change. The SACCO people, you don't have to change where your bank is. Your bank stays. That's the operational account. The unit trust account becomes the investment account. Anytime I need money from the investment account, within 48 hours, I send an email and it is shifted from the investment account to the operational account. Have I lost you? Or it's still clear? Excellent. So that's how I'm able to get my money. Thank you. I've talked of two things. You notice I first started with shares. Shares are different from collective investment scheme unit trust. Sharing and selling of ownership in companies to buy at a low price to sell at a high price, and give me part of your profit MTN. When you are dividing, I'm there, give me some. Okay? That's a shareholder. That's different from a unit trust holder where I am looking to earn an interest. Terrace, please come and give some closing remarks, and then we open up for questions.
Dr. Martin, I want to think knowledge has been shared, and there's something that has been learned from all of us. Just like Martin says, these are different investment opportunities before you. Shares and collective investment schemes or unit trusts. Just like Martin is sharing right now, I like to tell this story because it's so real, and I wish I had started then. 20 years ago, I probably was seated somewhere there in a school or campus that Capital Markets Authority organized. It was the first time I had this discussion on shares. At the time, there were no collective investment schemes. And I just wish I had invested then. Is it possible that my portfolio would be bigger now? I want to think so. So we have the opportunity now. We are not very young and we're not very old.